The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the October 10th, magnificent Monday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hope you had an extraordinary weekend. Let's make sure we have an extraordinary day today. And, of course, the easiest way to do that, well, it's to always remember that life happens for us, not to us. That's right. We need to make that one little 2x4 shift. It means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go look at the circumstance of these markets. We're going to go figure out what the buyers and the sellers, what the bulls and the bears are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. Of course, internationally, 727-445-1044. And by your fingers, you can email me, Steve, at TFNN.com and Inside the Tiger's Den. A ping will do it. So let's go ahead and get this show started on Magnificent Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we've got the Dow traded up 116 points, trading out 18,356. S&P up about 13, trading at 2166 and change. NASDAQ Composite up 46 points, trading at 5338. Russell 2000 up 16 points, trading at 1252. You've got gold up $9, silver's up 30 cents. Light sweet crude up $1.49, leading the charge here to the upside. You've got Tesoro Inc. That's trading up $22, 23%. Google is trading up $15, nearly 2%. Diamondback Energy up 11%, 11.11. It's up nearly $11 as well. NetEase trading out at $261.78. Chipotle, that's up $8. Chipotle up nearly $8 as well. So quite a few things moving to the upside. Of course, there's always things moving to the downside. You've got Acacia Communications down 7%, off $7. Twilio Inc. off 11%, down $6. Bristol Myers Squibb down $6. Dover Soul, no, it's just Dover Corp, down $5. So let's begin the day. And again, I do hope everybody had a great weekend out there. Of course, many people affected by the storm, by Hurricane Matthew, as it cruised up the East Coast out there. So I hope that none of you listening or none of your friends or family were in the affected area territory, but there's probably a good chance that they were. So I hope everybody is doing well. Now, let's go take a look at the market is doing well. Let's go or maybe, is it doing well or not? Let's go take a look at what it's doing, what it's communicating, and to steal a phrase, or how about I will borrow a phrase out here. We're going to have to dissect and bisect the time frames of these markets to try to put this together as to what the market is doing. So to begin with, let's kind of go. I want to start off with the S&P cash indice at first. Then we're going to switch over into the ES mini. We'll do the same thing probably with the NQ and the Qs out there. So the reason I'm going to start by taking a look at the S&P 500 is because I just decided that's where I'm going to start. No, for really good reasons out here. Now, here's what you and I know at this stage of the game, right? We're going to take a look at the patterns that you trade all the time. You keep your eye on these patterns, right? There's about a half a dozen of them. Those are patterns that I teach in my workshops, which, by the way, you can access those extraordinary workshops for $49, but that's not why I mentioned it. I mentioned it because these are the patterns that you trade. So here's what you and I know about the S&P 500. The bottom that it made, the Brexit bottom back in June 28th, from that low all the way to the high so far, all-time high that has formed, was back here on August the 16th, 15th or 16th. I think it was I can't recall which day it is. It's just the bottom of my screen says 16th, but my mind says maybe it was the 15th, right around that trading session. But that was a seventh wave move to the upside. I don't know why it's off just a tad. See, if I move it just a little bit to the left, it turns out to be the 15. Really weird out there. In any event, so you've got a seventh wave move, oftentimes identification of a top, right? Why it works like that, why the market's singing the key of G, only Stevie Wonder knows out there, but it does. And so that's a beautiful thing. Now what we know about the S&P 500, trading inside that old wedgie pattern. Price today, as bullish as it is, well, sort of bullish, and I say bullish because it's trading above that oscillator unchanged line, which is above zero. And one must respect that. 2159.69 is the exact price out here. Now, what price has not done, hasn't broke outside of the wedge, hasn't even been able to test the trend line of that wedge to the upside. Of course, it has not broken it to the downside either out here. So that says price could continue to trade within this cone of silence out here. But it doesn't say bearish here just yet. You get a close below 2159.70, right? That's going to always change. So we'll just say 2159 today. Then you'd have certainly an indication of any kind of a false break to the upside. But really, how can it be a false break? We haven't even cleared the downtrend channel out there. Now, is that important? Look, that 2159 level is important. That's really why that's one of the things that's important. The bottom panel of the screen out here, which is the price oscillator, which is how I'm able to determine Stevie's red lines. One of the things that goes into that calculation out there. It's above zero and it's rising. And that is really important because if we're below zero and falling, I would have a totally different outlook on what today's or yesterday's, Friday's move actually meant to the marketplace. But we have not seen that type of move. So we won't really spend any time on that. When it does happen, then I'll alert you to it. Okay, so we know that the S&P 500, I think at best case, you have to call today's action bullish to neutral out here. Okay. Now, I mentioned that seventh wave move, did I not? I know I did. And if we go take a look at the ES Mini out here, we're going to see on the 30-minute chart. I went ahead and kindly posted this into the Tiger's Den as it was occurring out here. If we take a look at, that's the 30-minute chart. Some people might say, hey, this chart here, well, no, it doesn't look like anything. It looks like the 30-minute chart. But if we take a look at the beginning of our counts at 12 noon, this is on October the 7th, as price was making its high today, this morning at 10 o'clock, it went ahead and made that seventh wave move. Now, we know that that was confirmed because the following trading session at 10:30, and that's just simply because it did not take out the previous high. Turns out that's the high of the day, and price began to move lower. Made a lot of sense out there. Okay, now move lower says, well, where are you moving lower to, right? We've got to try to figure out where are you moving lower to. Was that the actual top? It could be. It could be, but I don't know. I don't know. When you've got these price oscillators in a daily chart above zero, if you're talking about the trend is your friend, the message is the trend is its friend. That trend is actually to the upside, as neutral to bullish as the S&P cash was. The interesting thing here, and here's where we're going to know today what's going on. And we'll take a look at this. This is part of the dissect and bisect. The 10-minute chart here for the ES Mini made a perfect Tom DeMark combo, Tom DeMark sequential count. Also, I teach that in those workshops, which you can gain and get by coming to the homepage at TFNN.com. We'll pay attention to that hammer candle when we get back from this breakout here. My name is Steve Rhodes, author of Mastering Probability and host of the Trader's Edge Show heard daily here at TFNN.com. On Wednesday, October 19th at 5 p.m., I'll be hosting a special one-hour event, Trading Range Boundary Lines, where I'll teach subscribers how to identify hidden support and resistance levels, the kind that you definitely need to be aware of for your trading and investing. You'll learn how to plot major horizontal support and resistance, how to identify breakouts and breakdowns, and how to project the next price move. These support and resistance levels work for stocks, ETFs, futures contracts, currencies, and these patterns work on every time frame. By signing up for Mastering Probability right now, you get the first month of my newsletter service for only $49, and that includes October 19th's Trading Range Boundary webinar. Plus, if you sign up now, I'll include access to my 3 one-hour workshops, the ultimate trading signals, the ultimate reversal signals, and the long, short line that every trader needs to know. This is an investment you won't regret. For all the details of the upcoming workshop and reserve your seat today, visit the front page of TFNN.com now.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 118, S&P is up 13. So what we know about the market thus far, we know that when we looked at the 30-minute chart, and this has really been an intraday trader's market for as long as I can remember here recently. So we know that we got to one of those of the market. The ES, the NQ did the same thing, got to that seventh wave move. So identified for you and I, we're going to see the market either make a top or back off. And then that says, okay, let's go dive down into some other intraday charts. So we just selected the 10-minute chart, right? That way we don't have to keep our eyes glued to the screen out here. As I had indicated to you, if you take a look at the numeric counts on my chart, as this thing was making its highs, as it was making that seventh wave on that 30-minute chart, well, we got these nice little 13 counts, both the Tom DeMark combo, which can definitely be the indication of a top. Now, you got to stay within your time frame charts, right? 10-minute charts. That's what it means. You also got a nice TD sequential count that took place on the following bar out here. And then when we saw price move below that oscillator unchanged line, that red line on my screen, that was the indication that these patterns were taking hold. Now, what occurred here at the time frame of 12:30, so as the market really started to back off, what it also formed was a hammer candle. Now, a hammer candle at the end of a pattern, which, by the way, this happened to complete the third Tom DeMark pattern that I taught subscribers and that you can also get access to, was your TD setup, your TD 9 count out here. You see this little 9 on the 1240 candle session out there? That occurred right after the hammer session out here. You got a hammer candle and a completed portion. So what does this say? That is often where the market, when you see a TD9 count, doesn't always, what you anticipate. Right? This is all about being able to anticipate what the market is going to do, how it's communicating to you and I. Well, the communication there after 9 count is that the market is going to pause or it's going to go ahead and reverse courses out here. Now, if it reverses courses and starts heading higher, Right now, it first has to take out the 2161 level. What we have is a super duper, superty duperty. Who was that guy that used to say that? My kids used to watch that purple dinosaur. What was his name? It wasn't Dino. But in any event, you would have a super A to B equals CD to the upside out there. I mean, because it was only a 0.382 retracement so far from the highs. So we want to be paying attention to that. Now, it could also be an A to B equals CD to the downside. I don't know which it is just yet. Maybe you do. I don't know which it is just yet, but that's what we want to go ahead and pay attention to. Hey, if it's an A to B equals CD to the downside, we're going to see a basic, or we should see a miserable failure on today's move up there. That's right, Barney. But was Barney Rubble? That's right. It was Barney. I think was that purple dinosaur's name out there. So that's what's going on. It's also, if I take a look, and I just kind of step over to the NQ right now. If we take a look at the NQ, here's the 30-minute chart. There's your seventh wave move to the upside, very close to an A to B equals CD completion out here. But here on the 30-minute chart, this was why I'm a little bit suspect on what the market wants to do. You see, price pulled back to its oscillator unchanged line, that red line on there. And so we get a seventh wave move, says price is going to move back, which it did, but it moved back right to support. I am not convinced that this seventh wave that has occurred out here is actually the top. If it was, I would have sent out an alert to subscribers to say, fire away at the short side. I don't know just yet. With the NQ being the muscles inside the marketplace, and with prices pulling back to support on a 30-minute chart out here, what I want to see is, can it get back over its high that it formed at 10 o'clock this morning, and then just basically eliminate, recycle this seventh wave move to the upside out there. So that's what we're watching. What else can we watch for inside of the NQ? Well, it's relatively simple. If we go over and take a look at the daily NQ, the number you're going to be paying attention to is going to be 48.92. 48.92 is going to be the number, because if it closes back below that level out here, well, then we have a failure at a swing point. That's a swing point from September 22nd out there. I don't know and I think it's not a stretch to say it's going to be a failure on volume out here. In fact, today, from a volume perspective, just to give you an idea, if we just do straight line math, you have the SPYs today at 28.9 million at 1:23 in the afternoon. That says that today is going to be the lightest volume day of the year. Now, I don't know what's going to happen between now and the close, but if price maintained the same level that it did for the first 4 hours of trading? I should have this, 1:30, yeah, 4 hours of trading, we'll do somewhere in the 51 million share count. You're at 28.9 right now. The last time that the SPYs did volume in the 51 million category was actually December 24th. Doesn't even qualify as this year, right? But we'll go back to the holiday. On December 24th out there, you did 48.5 million shares. That is how light the volume is in today's market. Now, today, arguably is a holiday. It ain't no Christmas Eve. That's for sure. It is just not with regard to trading volume. So this is really, really weak out here. Does light volume alone mean that you should go ahead and sell the market? For goodness sakes, no. Of course not. We've got to look for other patterns that are setting up, or failures, or things along those lines in order to see that. So the market can easily go up on light volume. It has for the most part since March of 2009. Why is today any different? Look, we pay attention to it. And you know as well as I do, okay, we don't really give a hoot about the volume in the Qs, the IWM, the diamonds, or the SPYs, right? Because it just isn't working. I can sit here and start my day or start my newsletter service with volume in those ETFs to try to go ahead and guide subscribers as to what the market wants to do. Of course, I would be guiding them off the deep end of a pier, and I would never do that out there. Volume with regard to swing points on individual stocks and so forth, whole different scenario. And I think it's all because of all of the different types of hedging and so forth that goes on with inside these ETFs. But nonetheless, an extremely light volume day out there when we take a look at the markets. As far as the Qs are concerned, they'll probably do volume somewhere around the 15 million share level. Also extremely light. IWM around 23. Looks like the what did I say? So the diamonds around 2. My goodness, so absolutely light volume out there. So what do we do? We anticipate and we just sit and wait for the market to give us information. We have to see all-out failures inside the market before we decide to jump to the short side out here. At least that is what I'm suggesting that you would do. If we take a look at the VIX index out here, it's not conclusive. Well, it's conclusive to say sit tight. Sit on your hands. Because what you and I are watching now, what would be really interesting today, this would be a beauty. You'd actually love to see these signals, these potential topping signals inside the indices, and you'd love to see the VIX index trading above 1372. Yeah, 1372. You're trading at 1338 right now, because then you'd actually have the VIX index above the 50-day, with some of these other patterns out there. We don't have that. And so what does that mean? That means the VIX is giving us a signal that there's plenty of liquidity and the market can move lower. So that is what's going on. We have our benchmarks. We have what it is that we're looking for the market to continue to give us clues. We've got some questions. One in the Tiger's Den saying, can we take a look at Amazon, AMZN? And we can do that. We will do that. Somebody asking about NUGT. So we'll do that as well. We get back from this break. Dow's up 118, S&P's up 13. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So let's go take a look at Amazon. AMZN is the ticker symbol out here. And for me, the easiest, and the question is, can I take a look at it from a topping action standpoint out here? So we're going to take a look at, because Amazon has had such a nice run. For me, looking at this on a little bit longer term time frame, which is going to be the weekly chart, is what I'm going to defer to, at least initially. And here's what you and I know about Amazon. We know that it's in a confirmed A to B equals CD to the upside on a weekly basis. How do we know that? Here, again, when we use individual stocks, the volume has more meaning. Again, I can't totally explain to you why. I just know that it does. And if we take a look at the B point, that's the retracement. That's the level where the retracement began on the week that began February 28, 2015, of all places. Now, what you and I can see here is that it made a 54.1% retracement, not a 0.618, not a 0.382, a 54% retracement. What we also know is, as strong as the move in of Amazon was off of the January 12th A point, or the low that we've used for this A to B equals CD, all the way up into that December level, this move along the C to D leg is stronger than that move was. That move went from 285 to 696. 696. So what that tells us, what that tells me and you, is not only is Amazon on the intermediate to longer term basis headed to 885.19. This will probably blow your mind. And there's nothing here. And when I say cross the B point with volume, I'm referring to that December 28th level. That was 16.7 million shares. It was crossed with 27.2 million shares. Even if I do the math for a holiday week versus that of May 9th, it's still going to surpass that from a volume standpoint out here. So it says, hey, no reason for it to not at least get up to $885. That's $40 higher. Shoot, Amazon, quite frankly, can do that in a day or two. But the reality is, Amazon here could easily head to 997, make a 1 to 1.272 A to B equals CD. In fact, there is nothing. When I say nothing, I mean there is nothing, zilch, nada, zero indication to your eye that it wants to do anything but do that. This C to D leg stronger than that A to B leg out there. How do I know that? Look at where price is traveling in relationship to that C to D line. It is simply stronger. Now, downside, where is the potential problem inside of Amazon? And it's only a potential problem at this stage here, is because we're into what, October the 10th out here, is on a monthly basis, which is the chart that I have up on my screen out here, price is moving higher, doing it with less relative energy out there on a monthly basis. It formed this little nice TD sequential count back in December of last year, blew right past that after a nice little retracement. So that's a strong continuation mode. You know, in the TD setup phase, we're only in phase number 6 out here. So it says it wants higher price. So price is moving higher, doing less relative energy. If we were to see some kind of bearish reversal signal, then I would have a different outlook. But we don't have that. So my outlook inside of Amazon on the intermediate term basis is this thing is going higher. Now, on a daily basis, is there anything out here that suggests that, hey, maybe Amazon wants to do something else intraday, maybe pull back, anything along those lines out here? And the answer is no, not just yet. You get below 838.37 to be exact, then it's going to indicate to us there's retracement. Otherwise, I expect we'll see some higher highs inside of Amazon before maybe it gives us a short-term retracement signal out there. So I hope that helps you out. I don't recall who it was that asked, but it might have been Mr. P or Mrs. P out there, I think so. Okay. The second question, there's 2 questions out here now. There was another question that asked if I would take a look at Nugget, which we'll do. And another question was asking, why do I pay attention to the VIX index? And so I'll go ahead and answer that too. So with regard to Nugget, NUGT is the ticker symbol. That is the 3-time ETF for the gold miners out there. So it really tracks the GDX. But let's take a look at NUGT for our listener out here. And let me just provide that listener with some levels to pay attention to. Those are going to be our TAS levels out here. So inside that, I'm assuming, it's a bad assumption, but I'm assuming you're long Nugget. If you are long Nugget, here's what you would like to see. And that is, you'd really like to see price hold above 12.16. Now, why do I say 12.16? Because 12.16 happens to be both the daily and the weekly TAS market profile. When I say, I'm sorry, let me take, what the Sam heck was I talking about there? It must have been the chewing tobacco. No, I can't believe I would. It was the daily bottom of the box and the daily point of control. That's really what I meant to say. But my mind was thinking one thing and my mouth was blibber blabbering. 12.16, that's an important level of support. Price happens to be trading at 11.98. So that's not a good thing. We don't have a bullish reversal signal here inside of NUGT. That's not a good thing. Only thing that we've got out here is a potential A to B equals CD to the downside out here. And if that is what is in store here, then Nugget would like to take a ride on the reading down to about $6.41. Is that what it's going to do? I don't know. I don't think so, but I don't know. If price moves higher, you start to get comfortable when price clears 1404. But there is nothing inside of the NUGT chart. Well, sort of nothing. Nothing that says that price is ready to move higher until we see the bulls show up. Now, there is an indication that this is stretched to the max out here. And when I say stretch to the max, take a look at when it formed its top. Price is moving higher, doing less relative energy. Where are we at now? Price is moving lower, doing less relative weakness out here. So it won't take much for the bulls to arrive and to save this thing and to communicate to you that NUGT has formed a bottom. It's just not there just yet. When it does form, whole different message out here. And of course, you can see the oscillator and change line also at about that 1404 level. So that is a key level of resistance on any bounce or any move to the upside. You want to see it be able to clear that out there. So that is what's going on. And the question was, do I hear a drum? Yes, you hear the roofers up there who were delayed because of the hurricane, just kind of sort of above my head. So I'll apologize for a little bit of pounding. You should be in my head out there because that will tell you get a little bit of pounding. Okay, so that takes care of the NUGT question for our listener out there, viewer. And now let's go on to answer the question for AG with regard to the VIX index. So let me do this out here. Let me do this. Let me go over to the VIX index. And let's see here. What do we want to do? How do I want to do this? I'm going to do this by starting a new page. That's what I'm going to do. So let me put up the VIX index. $VIX. Let me do this as well. We're going to only take a look at closing prices, if that's okay with you. So let me edit this little chart out here. Give me a moment to do that. So that way I'm going to make it about as clean as I can with regard to the VIX. So there's our line on the close. So I'm going to go ahead and decorate this chart. I'll pull it back in time. I'll take you back in time into like the 2007, 8, 9 time frame, take you to where we're at today, and I will answer that question unequivocally, while you too should pay attention to the VIX index. Steve Rhodes with TFNN. We'll be right back, folks.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 108. S&P is up 12 points right now. So let's go answer the question for one of our denners here about why pay attention to the VIX index. And it is this. Now, there are several extraordinary tools that the volatility index can provide you in your trade. And I'm going to just share with you the one that you and I look at from a general perspective out here to identify whether or not the market has liquidity or not. Oh, we've got Alex on the line right now. So, Alex, thanks for calling in. Thanks for holding. How are you doing this afternoon?
I am doing good, Steve. How are you doing?
Excellent. Thanks so much. Let me first describe for you, because I know you're watching us on TigerTV or Inside the Den here.
Yes,
so
I just wanted to clarify my question because I know why we use VIX index. My point is that VIX is just a reaction to the market movement. The first market moves, after that VIX moves. So I pay attention for a certain level of VIX. For example, at the moment it's 25. Like 2 years ago it was 30, trying to figure out bottom. And you gave an excellent, I love it, indicator, which is a rate of change on VIX, which probably will save my life in the future.
Okay, good.
So that's my question. Why absolute value of VIX below 25 at the moment is important?
Oh, well, see, you use it, you have found a way to utilize it for your trading. A way that I utilize it for my trading, being able to help listeners, viewers, subscribers navigate what the market is doing, is not pay attention to the value of the VIX, but instead pay attention to the value of the VIX in relationship to its 50-day exponential moving average. The top portion of my screen is the VIX index, all because I have line charts out here. Both the top portion and bottom panel, which is the S&P 500, happen to be the closing value of those indices. The red line on the top portion of my chart is the 50-day exponential moving average. What I have found, and it's not unequivocal, it's not 100%. What I have found the best use for it, the VIX index, is when prices doesn't really matter what it's trading at. You see, a lot of people You've heard people say, hey, the VIX is at a low level, there's complacency, there's no fear, and I have not figured out how that is helpful in trading. And actually, the comment is unwarranted, unreliable, inaccurate as can be. And the reason that I say that is if we just go back into the top out here in 2007, in fact, if we go back to December of 2008 out here, just to begin with, if we go back into, well, let's go back to the March 2009 lows. That's going to be the easiest. And the VIX index was trading at about 43 bucks. And people would automatically think, hey, if it's at 43 bucks, this market is going to come crashing down. Instead, take a look at where the VIX is trading in relationship to the red line. When the VIX index is below the 50-day exponential moving average, typically what you'll see is the S&P 500 move higher to sideways. Now, at tops and bottoms, when the market is making tops or bottoms and it's going to reverse, that is not what you're going to see. I'm not talking about trying to identify the top and bottom. I'm trying to utilize a trend that says, hey, when the VIX is below the 50-day exponential moving average, it doesn't matter what it's priced at. Because you went from $47 on March 11th, or $43.61, down to about a price point of $15 back on April the 14th. When the VIX index trades above the 50-day exponential moving average, if we go back into about the April 2010 high, before the flash crash, when we saw the VIX index above its 50-day, which was at that time the 50-day was 1829, and Alex, it was traded at 2108. When you see the VIX index trade above that, my interpretation is liquidity is drying up. When liquidity dries up, the market moves lower. Maybe moves lower in a big way, maybe it moves lower in a small way out there. So the number itself, for my trading, not for your trading, the number of what the VIX is trading at is irrelevant with regard to this tool. Instead, I've found a tool that is more reliable in helping us to identify what the market's real next move might be. Now, there are other extraordinary ways to utilize the VIX. Right now, as I was saying earlier, we've got some of these maybe short-term topping patterns out here. And what would be a cool trade today is if we did see the market still trade positively, and yet the VIX index closed above the 50-day exponential moving average. That combined with some other things would tell me, hey, you know what? We're going to see some type of swift move to the downside at some point in time too. So I don't utilize these other numbers that you have because I don't know your trading technique and so forth. But if you use it from this standpoint, it's an extraordinary tool. And if you just track it, if you put the S&P on the bottom portion of your chart out here, for example, here, come back and now we're to like current days, current time frames. February 18th is when the VIX index fell below the 50-day exponential moving average. What did the S&P 500 do? Continued moving higher, even through retracements and so forth. Continued moving higher basically until June the 10th. June the 10th, the VIX index goes above the 50-day exponential moving average. What does the S&P 500 do? The S&P 500 moves lower into the Brexit date out here. So, and then it wasn't too long after that Brexit date. It was right around the June 29th. VIX falls back down below the 50-day exponential moving average. Voila, the S&P 500 continues moving to the upside out there. So that's one of the ways that you can utilize the VIX index in relationship to the 50-day exponential moving average. And somebody might go out there, you might go out there and find, hey, don't use a 50-day, use a 39 or use a this or a that. 50 seems to work pretty well for me.
Okay, thank you. So my understanding is that it's a matter of your trading approach.
Well, it's really going back and so how I derived this, Alex, was I went back and one of the great tools inside the most trading platforms, certainly with inside eSignal, is I was able to dump all the data. So I was able to dump all the data with regard to the VIX index, with regard to the S&P 500, with regard to what the 50-day exponential moving average was. And when I did an actual dump of years and years and years and years and years, so that I had thousands of data points, and I went ahead and looked for an edge with regard to what the market was doing, I found that edge, oddly enough, to be the 50-day exponential moving average. It had a better win-loss ratio than anything else that I could find out there. So it was really just simply going back through testing and saying, how can we come up with a tool that will work, again, at tops and bottoms where the market is making a turn. This is not the thing to be using. Wave counts, price relative strength divergent patterns, tests of maybe double tops, double bottoms, things like that. Other tools that are out there, price relative strength divergent. Those are ideal tools to be able to call tops and bottoms. But in general, kind of like the meat of the market, this tool really came out to so it's tried and true and tested, and it doesn't matter where the VIX is trading at. Doesn't matter whether it's trading at 50 or whether it's trading at 1345.
But how VIX shows you a bottom? I understand how it can show a top or approaching top, but how?
Well, sure. One of the ways is you can see how does the VIX show a bottom?
Yes.
You want to hold on through this break?
Thank you.
Okay, we'll be right back with Alex from Newton, Massachusetts. We'll be right back, folks.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focused Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's up 106, S&P is up 11. We're on the line with Alex and Newton. We've been spending time taking a look at the volatility index and the extraordinary techniques or tools that you can utilize to assist you with your trading. And to finish off that, what Alex and I are going to look at is how can we utilize the VIX index for a pattern to help us identify a market top. What I have on my screen right now, Alex, the top portion of my screen is the S&P 500. Again, it's a line chart, folks, so it's all on a closing basis. And the bottom portion of my chart is the VIX index, volatility index, also on a closing basis. And one of the ways that you can identify a top, Alex, is when you see, and utilizing, and typically it's a significant top, typically when you see the S&P 500 on a closing basis make higher highs. That would be the green diagonal lines on my charts up here along the top portion. And what you have along the volatility index is it's making, however, higher lows. That is an unnatural phenomena. And what I have found is that the winner of that battle in that arm wrestle match is the VIX index. The VIX index is the one that is really giving us the signal that that move higher is not real. Not that it's not real, that what you should expect is going to be some type of pullback or correction. Oftentimes it can be relatively significant. As was, if we just simply go back into June of 2016, remember, the yellow line now on my chart here, folks, is where the VIX index is. That's the 50-day exponential moving average. But we can see back into June of 2016, the S&P 500 was making higher highs, and the VIX index was making higher lows out there. Now, fast forward to where we're at today. The S&P 500, as of yet, has not been making higher highs. But the volatility index, if I just simply get a line chart, I don't know what color is going to come up here. Well, it happens to be a red arrow. We'll change that to green later. But you can see that this is making higher lows out here. So we don't have that exact pattern, but I will tell you that we do have a meaning with regard to the volatility index, providing you and I with some information with regard to these markets. So that is a great pattern to help you in your arsenal for identifying market tops out there. All right, my friend?
Thank you so much. Thank you, Steve.
Hey, my pleasure. That was Alex and Newton, and those were some pretty good tools. We won't call them trade secrets, but they are secrets to use for your trading out there. So, and there's others. There is a handful of other tools that you can use in applying to volatility index that really assist you in the gauge of patterns that exist when the markets make both tops and bottoms out there. And before we went to break, Alex had asked about bottoms, but he was really referring to tops out there, and that's why we switched over to that. Okay, so we've got about a minute left. What is it that we're going to pay attention to today? We talked about this earlier. On the 10-minute chart, you and I are going to pay attention to this hammer candle. The hammer candle that occurred out here at 12:30. The bottom of that hammer candle happens to be the price point of, we'll try to give you that price point out here. It's a 12.57. At 21.57 1/4. If we see a move below that, you have an A to B equals CD to the downside. That is setting up. That'll give us a price projection right now. I would tell you that would give you a price projection of 21.5475. The unfortunate thing, if that's actually what takes place out there, it's neutral, because it'll pull price right down to an important level of support, which is 21.5450. If you get below 21.5450, you're going to see the ES Mini move down to about the 21.39 level or so. So, folks, stay tuned. Our man David White, he's going to be up next in the Tom O'Brien Show from 3 to 5. Thanks so much for being here. Have a magnificent Monday. We'll see you on Terrific Tuesday, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.